We're planning on setting up trusts for our grandchildren. What is the best investment for long-term growth that minimizes or eliminates future taxes?
Welcome to Barry's Bites. Please join our host, attorney and financial advisor Chris Barry.
We're planning for grandkids, talking about setting up trusts, and we're looking at investments, and we want to minimize taxes and maximize growth. So here's you. We would set up an asset protection trust, because now the advantage of the asset protection trust is you're protecting against like divorces, creditors, and you can make sure the money stays in the bloodline. Plus, if you pass away, you can appoint someone else as a trustee. So we're setting up trusts, and that's a great idea. And I would set it up as an asset protection trust. So that's the first step, is to create the trust. Then the next thing is, okay, what are we going to put into the trust? So things that you can put into the trust, you can put like a brokerage account or investment account. You could put real estate into the trust. Life insurance can go into this. Annuities, fixed index annuities can go into this. And here's the thing, what cannot go into the trust? Things like a Roth. You can't open up a trust and then put a Roth account in there. Likewise, IRAs cannot go into the trust. This type of trust, this specific type of trust. Other trusts we can talk about differently, but for what you're trying to accomplish here, these things couldn't go in here because these are what we call qualified accounts. They have to be in the owner's name unless you pass away. So problem with the brokerage account is there's going to be capital gains. Real estate, that's kind of illiquid. Life insurance is kind of an interesting option because life insurance can grow tax-free and you can pull out the proceeds tax-free. Fixed index annuity, you're going to have taxes. So really, you're a little bit limited. Like the government's going to want to take their cut. The most common thing would be to open up like a brokerage account and invest aggressively for growth. Yeah, they'd have to pay capital gains, but that's going to maximize the return over a long period of time. You could look at like treasury bills or something like that. That grows tax-free, but it's not going to grow long-term as much as an investment account with equities. A little bit of a tricky choice would be life insurance, because this theoretically could grow, depending on how the markets do, like 10% a year. I'm not saying it is, but a lot of times there'll be a cap at 10%. You might look at growth of anywhere from 0 to 10% each year, but the proceeds could be taken out tax-free. Like I have some cash value life insurance that I'm using to fund my kids' college education, where I'm going to pull that money out tax-free in the future. The easy answer is just an investment account, but again, you're going to have to pay capital gains on that. Off the top of my head, I can't think of anything else that would minimize taxes, still give you long-term growth, and be invested in the trust. The only one that would meet all of those requirements would be the life insurance.